In this video, I want to highlight the differences between growth stocks and value stocks. The key differences between uh, growth stocks and value stocks you should know. So number one, I want to look at introduction to growth and value stocks. Introduction to growth and value stocks. So growth stocks are shares of companies expected to grow at an above average rates compared to other companies in the market or in the same sector. Value stocks are shares of companies that are considered undervalued relative to their fundamentals or intrinsic values, typically with low PE ratios. They have low PE ratios. They are considered undervalued compared to other companies in the same sector or in the overall market. Number two, characteristics of growth stocks. Characteristics of growth stocks. They have higher growth potentials. They have potential for high growth. Growth stocks typically, belong to companies in emerging industries or with innovative products or services that are expected to see rapid revenue and earning growth. So they tend to reinvest their earnings, reinvestment of earnings. These companies often reinvest their profits instead of paying out, cash as dividends. They reinvest their profits to further generate growth. There's higher valuation. They possess higher valuation ratios. They have higher PE ratios. Growth stocks are often have higher PE ratios because investors are willing to pay a premium extra dollar for future expected future growth. Examples of growth stocks are tech companies like Tesla, like Amazon, have historically been considered as growth stocks. These are typical examples of growth stocks: Amazon, as well as Tesla. Number three, characteristics of value stocks. We just considered characteristics of growth stocks. We want to look at the key features of value stocks. Value stocks, number one, are undervalued. Value stocks are priced lower than their intrinsic value, often due to market mispricing or temporary challenges facing the company. They are usually neglected, underpriced, kind of disdained because of maybe temporary problem the company may be passing through. Then the stable earnings. Stable earnings. These companies tend to have stable earnings and dividends, making them attractive to conservative investors and investors who are looking for stable income stream. Then there's lower valuation ratios. Value stocks typically have low PE ratios, reflecting their undervaluation relative to earnings. So example are large established companies like Johnson & Johnson, like Coca-Cola. These companies are often, considered value stocks. Please like this video and subscribe to this channel if you've not done that. Number four is key differences between growth and value stocks. Key differences between growth and value stocks. So growth versus value focus. Growth versus value focus. Growth stocks focus on capital appreciation through rapid growth, while value stocks focus on stable, steady returns with potentials for capital appreciation. With potential for capital appreciation, and not only that, it equally stands to benefit whenever the market corrects itself. Whenever there's a correction, the company will tend to benefit. will witness price increase. Then risk and returns. Growth stocks tend to be riskier but offer higher return potentials, whereas value stocks are typically less volatile and may provide more consistent returns. Market sentiments. Growth stocks perform well in a bullish market with high, investor optimism and expectations, while value stocks often underperform, in bearish or uncertain markets. Whenever there's a market uncertainty or there is a bearish run in the markets, they tend to, value stocks tend to underperform. So which one do you really choose? Which one, if you have to make a choice, which one will you go for? So as for growth stock, it's ideal for investors looking for higher returns and are willing to tolerate the volatility and the risk. So if you can tolerate volatility, you can bear risk, then you go for growth stocks. Value stock is suitable for investors looking for stable returns, lower risk, and potential for long-term capital growth at a more reasonable price. Okay. So it all depends on your inherent ability to bear risk. You have the patience, and you can really, you can stay, you can endure for a long time. Then you can go for, value, because value stock may not really. It might take time for the market to take note of the value inherent in the company and then beat the price up. It might really take time. So in conclusion, growth and value stocks represent two different investment approaches, so each with unique risk and potentials. Growth stocks are focused on future expansion, while value stocks provide more stable and potential growth. And that particular stability and potential for price correction. You must take this into consideration, or else you're going for the wrong kind of stocks. Analyze your individual preference and know what is really good for you. You can take risk, you go for growth stocks. If you cannot stomach the risk concern, you are expected to go for value stocks.